Okay, we can start. Welcome to AI for Fairness and Compliance and ICAVE. And our first speaker will be Peter Chiu from Galisteo Consulting Group.
Thanks, Svetlana. My talk is Unsupervised Learning, Financial Reconciliation, a Robust, Accurate Approach Inspired by Machine Translation. So let me just tell you a little bit about my own personal and professional background. Svetlana, you can all hear me, right?
Yes, all good.
Good. So this morning, Charles Elkan actually made an interesting point, which I fully agree with, which is that for the type of stuff that we do, AI and finance, it's really important to have both, a business expert, I forget the exact word that he used to describe that, and the data scientist. So my experience is actually kind of an unusual combination of those two things. My first real job was in audit and accounting. I'm a certified public accountant and a certified fraud examiner. And I worked in audit for approximately 3 years, and then in technology and the business world after that. But I also have a doctorate in computational linguistics, which was actually on specializing in Russian. And we're going to get to some more Russian in a moment. And then the work that I do now is really in the area of data science. That's kind of how I describe what I do. My own company, Galisteo Consulting Group, we're a really small company. We focus on data analytics. We have some patents in this area. We do some work also in social media analytics beside the financial analytics. And just some of the work that I've done recently is on bot detection and adversary disinformation, which is kind of topical at the moment. So that's me and how I bring together these different strands. Let me just start out this presentation with a little bit of history. And I'm actually going to start out from the machine translation perspective. So back in the early days of, I guess we could call it data science, there was the IBM Georgetown Experiment. And this was in the middle of the Cold War. And the US military was interested in being able to do automated translation of from and to Russian, more from probably. And so the Georgetown Experiment was really a demonstration of a machine translation system. And it was much hyped, as you can see in the press release here. There were people, I think, within IBM who were claiming this was going to be a solved problem within a few years. And the way it worked was really highly rules-based. So you have here English and Russian and rules, and it was all on punch cards. And needless to say, the hype that it would be a solved problem within a few years didn't really come to fruition, and the funders became disillusioned with it, and it kind of languished for a number of decades. Well, I would argue that reconciliation, which is kind of the first thing that auditors learn how to do, is compare records, and you can get a sense of whether the records are accurate through comparing two different independent sources. Reconciliation now is kind of like machine translation then. Yes, it is automated, and here's an example of a screenshot from a web page where one of the vendors of the software claims that we can match and reconcile transactions in minutes. However, this is also a screenshot from a review of different reconciliation software products, that they rely on matching rules specific to one account or company-wide. And therein really lies the weakness. So it's really kind of approaching the problem in the same way that machine translation approached the problem and didn't really go very well for decades. So what can we do about this? Well, this is what this talk is all about. In the 1990s, there was a breakthrough made in machine translation, and it was in the form of statistical machine translation. And the idea behind this is really, it seems kind of obvious now, but to use all the masses of data that has been compiled, particularly in terms of parallel data, so documents that are translations of one another, and from that we can predict what the translation is of an unseen text. And I should say early linguists were very skeptical that this could be done, but they were proven wrong. I mean, it really did take the age of big data to make this happen. Well, the problem that we face in reconciliation is actually very similar. And I'm going to illustrate this with the first thing that auditors learn how to do, which is bank reconciliation. So here you have a bank statement, and I'm just going to highlight one row in this bank statement. You have a transaction on the bank statement. That's the bank's records. But a company or an individual will have their own records as well. So if you're doing it well, you're keeping your your check register updated with each new transaction, and each transaction there should really correspond in theory to one transaction on the bank statement. So here we have $57.48, right? This is just like a personal example. And I'm going to illustrate this with a toy example. Well, there's more to it than just that. Obviously, when you're auditing, you don't just look for a match in the numbers. You're also looking for other identifying information. And here we have, a description on both sides. But what I want to illustrate here is that this is really kind of like machine translation, because we have, in a sense, the bank's language and we have the check register language describing the same thing. And they describe it in slightly different ways, but you may have some shared words used in both cases to do the description. So, for example, the name of the vendor. Now, the date is interesting. We've got a date a couple of days apart because maybe the check took or the transaction took a little bit of time to get reflected. But here we can see, the date of the actual transaction and the bank side as well. There might still be a delay. There's a difference in how this debit transaction was described. On one case, maybe we've got an abbreviation. On the other case, a different kind of word used to describe it. And, again, food, groceries, different words used to describe the same thing. So just with this little personal example, we can kind of see that there's different languages used to describe transactions. So back to NLP for a minute, natural language processing. How do we take these past examples and use them to predict, how things should align in the future? Well, this is where machine translation techniques, particularly statistical machine translation, comes in. So if you have two parallel texts, you can actually align those using mutual information based on observed examples. And this is how you calculate the mutual information. Basically, it's like looking at the mutual information of, say, poor and pauvre in two different languages, and you're seeking to maximize mutual information. And with that, you can do alignments. Now, if you do that across a lot of text, you can kind of compile statistics probabilistically of what word aligns with what other word. And it might not be a one-to-one alignment. So maybe in one case, poor aligns with the plural pauvre. In another case, it might be with the singular. So it's probabilistic. Now, this is where we actually depart a little bit from machine translation and we go to vector space concepts. So we can also treat documents like the poor don't have any money. That's like a little miniature document. We can treat it as a vector. And using this alignment information with a matrix multiplication, we can effectively multilingualize those vectors. So now document one has numeric values for both French and English, whereas originally it might have just been English. Well, hopefully you can see how we can also apply that same concept to these little mini sentences, which are our transactions for the bank and the check register. Now, reconciliation can then be approached as an information retrieval problem. And this is where we, again, depart slightly from machine translation. We're using techniques from machine translation, but we're using it now to retrieve similar documents. And this is essentially what you do when you go to Google. You type in your search and you retrieve relevant documents. We're looking for some measure of similarity. So we can use, with that multilingualized matrix, we can reduce that using singular value decomposition. From that, we get each point is a document, and we can look at the similarity of points by looking at which points are close to one another, and we can measure that using cosine in vector space. So with reconciliation, what we're really trying to do is we're trying to take one of the red transactions, which might be a bank transaction, and we're trying to find the most similar transactions on the check register side. And the most similar would probably be the one that we would want to reconcile, providing it matches in terms of amount. And you can think of how you could look for the next nearest neighbor until you get to what the amount is that matches. So you have the amount to help you as well. Now, I want to show you how this can be implemented as a monthly process. And this is where kind of my auditor side comes out. What are the processes? What are the business processes that we would actually have our machine translation, AI process working within? Well, we start again with the bank data and the check register data. And remember, this is monthly. What I think we should start by doing is kind of make a tentative guess as what reconciliation using unique amounts. And the advantage of that is that that can be a fully automated process. Now, it might lead to mismatches. So this is where some QC comes in. So this is where the human in the loop is. But it's a lot quicker than doing the reconciliation in the first place, just to review. And you can do it on a sample basis as well. You don't have to do it 100%. Now, I don't know if you can see very well, but the middle piece in this jigsaw puzzle looks like it's a fit, but it's not quite. And those are the kind of cases we might come out with in QC. So the amount matches, but just something is slightly off about it. It's close but no cigar. And that's where the human would want to reject it. And what you're doing in a sense with that is you're training them, you're actually feeding that back into the training for future. With all that done, now the machine can do the what I described as the machine translation aspect of it. So the first step, the matching unique amounts, that's not really very interesting from an AI point of view, but the machine translation point of this process is where we get to the interesting stuff. It's where, that whole dimension reduction that I was talking about comes in. But again, you want to do some QC after that part of the process as well, because it's always possible that you have mismatches. Again, that's quicker than quicker than the human doing it all in the first place. And then hopefully after all that's done, you're left with only a very few examples that the human has to put the last pieces of the jigsaw puzzle in. And if you think about it from a combinatorics point of view, it's a lot easier to put in that one last piece than it is to do, it's less than 100 times easier, or it's more than 100 times easier than doing 100 pieces which aren't done. So the last piece should be easy for a human. The goal of this really is to make an explicit place for the human in the loop as part of the process, and also to bring the human as part of the machine learning in as well, so that each time the human does QC, you're training the machine to do better in the future where it made a mistake. It's almost like the supervisor or supervisee relationship. So how do we validate this? So I validated it on a toy problem, actually using my own data, my own bank reconciliation data. So both statements and register data for 51 months. It's 1,300 transactions approximately, not a huge data set. But I will say, though, that SVD is a scalable process. So there's no reason really why this should not scale up computationally. I verified the automated reconciliation through 100% quality control. I know my own data. And I used two measures to look at how good the reconciliation is. Precision, which is the percentage of reconciled transactions which I accepted, and recall, which is the percentage of transactions that were reconciled. So recall measures how automated the process is. Precision measures how good the automated process is. And the results of this, I think, are pretty good at first pass. And it's approaching 90% precision, recall above 80%. So essentially what this is saying is you're cutting out 80% of the human's work with 90% accuracy. And this varies slightly depending on how much you do the dimensionality reduction with SVD. Generally, the more you get better results with more principal components, which is not too surprising. What's also interesting to look at is precision over time. And I want to highlight one area of this. So it takes a little bit of time up front to get up to 100% here. And then we kind of stay pretty close to 100%. Then it actually drops off here. And what I found when I looked at this was actually there was something about the data that changed there. And it takes the machine a little bit of time to get back up to speed. But what's good about this is that it does show that the process is able to adapt to changing data, right? So, and actually in the end, with the human in the loop, your process is going to achieve 100% accuracy. I mean, with human help, of course, but again, the human's place in the loop is made explicit. I think what this helps do is actually address something that Yolanda Gill addressed yesterday in her keynote speech, which is talking about explaining the shelf life of models, right? But the good thing about, again, this model is that the shelf life potentially can adapt to new data because it's unsupervised. All right, I'm going to conclude. I think I'm almost out of time here. So conclusions are, this is a novel automated approach that avoids the brittleness of rules. You don't have to keep changing the rules every time the data changes. It's able to learn both from itself and from human supervision. There's no reason that this should not scale up. It's got pretty high accuracy, but as part of a workflow, it actually is 100% accurate when you include the human in the loop. What we can explain here is the model. We can explain its shelf life. We can explain to some extent the model uncertainty and training. And we can actually do that through, there is actually an audit trail here. I didn't really get into that, but we can look at like, what about transactions made them reconcile? And I think the approach points the way to a smarter use than this rules-based approach, which is very prevalent still in software for routine auditing and accounting tasks. The approach adapts to changing data, in short. That's the end. I don't know if we have time for questions.
Thank you. Yeah, let's have questions towards the end of the session.
Okay.
Peter, our next speaker